Well, that rally was nice while it lasted. News, tape bombs all over the place. Nvidia taking the market. China coming to the table. What are we to do? Look at some earnings, talk to Scott Devitt, Wedbush Securities. He's going to take a look at a lot of stocks for us, folks. We got a lot to cover on this Wednesday. Pre-market prep starts right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, let's add our charts here and we will take a look at the markets. We got a lot of action to cover here, folks. S&P's way off the low, way off the high, down 45 handles at 53.83 and a quarter. The buck getting hit again here near the lows of the move, down 63 cents, 99.33. TLT just down a few pennies, 87.75. USO up 35 cents, kind of bunching up at 66.83. Gold in the parabolic mode, up 6.95 at 304.73. SLV inching up too at 29.70. That's up 29 cents. Bitcoin futures up slightly. They're just over $84,000. I'm going to remove my charts and no, I'm going to leave them up here because holy mackerel. Dennis had some trading action last night, and I think who were you in there with in the STN room? Was it JV or was it Josh?
I think so.
Who was in there with you?
Yeah, it was JV last night. Was in there. JV Speculator was in there with me. There's a few other people in there with me too last night. Like where we were trading that number. I know Mike broke in and he's like, Nvidia news, and I'm like, same thing. You just watch a video fall, like, oh boy, here we go. What's the headline? I just started selling tech stocks fast as I could. Like when that Nvidia news broke last night, if actually, we could give you the news if you want. Oh, how was your night, Joel?
Yeah, oh man, missed some action. No, it was good. It was good, man. It was just the way things went. I mean, we had that quiet day yesterday. I was just kind of expecting a quiet Wednesday and Thursday, but that's not going to be the case here. How were you positioned when that news hit? No,
so I was long Qs, long Tesla, long Amazon, long ASML. I was long a whole bunch of stuff. Not Nvidia news hit, and that was at around 5:30. And Mike in the chat's like Nvidia news, and I'm like looking, yep, I see it, and I just started hitting bids. I hit my Tesla out. I got out of ASML. I got on my Amazon, started selling Qs. That started once I got out, then I was starting to short stocks. So I was like short SPY as much as I could, just try to get as short as I possibly could. And then we just kept leaking. But then, you're looking at it around 5:57. The futures were closed too, so it was a slow reaction because you get news dumps between 5 and 6. The S&P futures are closed, so the reaction's a little bit slower, which is nice. Allowed me to get out of some of those stocks. But then I'm looking at SPY was traded down 2 points. Qs are down 4, and Nvidia's hammered down 7, and every chip stock was hammered. I was like, this SPY, man, when these E-minis reopen, this has got to go low. And so I actually shorted a bunch of SPY, and as soon as the E-minis reopened, then the SPY really started tanking. And obviously, I was able to make some pretty good money on that. But I went, just being quick on the news, I went from probably going to lose a lot of money from the way I was positioned to making a lot of money. So, I mean, it's about quick reactions, knowing what to do. Obviously, thanks to everybody in the STN room. Mike, JV was all in there last night as we were talking about it. It helps, when you got more eyeballs, staring there and the markets are going, it helps. So it was a good trading opportunity last night.
So the SPY, it didn't fully price in the 6 p.m. open. I mean, or were you able to hit? You were able to hit things before. So the SPY.
See, the way it works, my nasally voice is cold. Absolutely insane. Trying to breathe. The way it works is the ARBs are obviously priced between futures and SPY. So you have arbitrage happening on a continuous basis between futures and SPY. That program does not run between 5 and 6 because futures are closed. So when it reopens at 6, it will pull the SPY back into where it needs to be. But sometimes SPY can get a little bit out to lunch, not a lot, but sometimes a little bit, because those arbitrage programs aren't running yet. So, but when you're looking at that many stocks hammered and you're seeing SPY down 0.4%, you're like, is it enough? Probably not. I mean, it's always a guessing game after hours. Arbitrage during the day doesn't exist because the high frequency traders have all 500 stocks to price off of. But after hours, it's always a little bit of a guessing game because a lot of those stocks aren't active. You know, even though the S&P 500, it's not like everything's got a 2-cent market or a 5-cent market. Some of those smaller components, the S&P 500, don't have much market at all. So you're always guessing a little bit, even with the futures. But, you know, it's pretty predictable that S&P futures were probably going to be, you know, down more than, you know, just the 20 handles that the SPY was pricing in when you're seeing, you know, Nvidia get hammered like that. So it's always a good opportunity.
Actually, that was not a bad open in the S&P. I thought it would have opened lower. Because it was weak after hours. Remember, like we had the buying balances. We were following that in the STN room,
but
and
then
they
popped
paired
up
off
after
right
5.
away.
We popped up a little bit after 5. We went green for a little bit. We were green when that news hit. We were green by about 2. S&P futures were closed. We were green on SPY, so we were green on SPY.
Ooh.
And then so it was like around 5:38 on SPY. So then we dropped about 50 handles worth on that Nvidia news. Again, you see the drop only at 6 o'clock. You see it on SPY come earlier because SPY was obviously open during that period between 5 and 6, and futures were not. So, you know, there's certain periods of time where, you know, obviously that's all you got is SPY. You know, obviously throughout the night forever, we've only had futures between 8 p.m. and 4 a.m. Now with the overnight trading, we have SPY pretty much around the clock. So, you know, that's the adjustments you got to just know about. So between 5 and 6, sometimes it gets a little bit dicey in there with the ARBs not fully running.
Yeah, back to the SPY versus SPOO argument. Well, the official news is that the company was recently informed by the government that it will need a license to export chips to China. That was the news. This one was not acting great. I mean, it rallied yesterday, but it was kind of tight. You felt the sellers in there. What do you do now? I mean, is this just a little blip in the radar? Is this the time to just buy the dip in Nvidia? Hasn't even given back half of the move. What, 115? How low did we get? 86. Let me check the data window here. 87, right? So that's about what? 97.07, 28-point move. We'll get out the retracement tool. It hasn't given back
not a bad idea.
Does this make you want? I mean, Dennis, you've been in just buy the dip mode. Is this catch your attention here? Halfway back.
I haven't been in buy the dip mode since we had the big pop, but will I be in buy the dip mode if we come down here? Maybe. I mean, I have Nvidia. I bought it back at 88. You know that from the STN room. I sold 2/3 of the position when it popped in a ridiculous day of Trump. Back at 100, would I buy a little bit more? Maybe. I mean, there's still a lot of uncertainty in this market, but I still think we're still going to be in chop mode too. I don't think we're going back down to the very lows anytime soon. I don't think, and some people think it's imminent, like we're getting back down there to 480 on SPY. I don't think we're getting back down there anytime soon. I think we're kind of past, we have new information, and we analyzed this a bit yesterday, but we have the new information where the Trump put is alive and well. When we were pricing a 480 SPY, many believe the Trump put was dead and he did not care about the stock market, did not care about the bond market. That is not true. Obviously, he does care about the bond market, maybe not so much the stock market, but when bonds start going down, he got very concerned and he backed off on the tariffs. So I think that's where I'm at, is there's a Trump put now and we know it's down there. So makes me a little more comfortable to buy dips on good companies at reasonable valuations. That's in the longer term portfolio. So I'm looking to rebuild some of the longer term stuff. I sold a whole pile of stuff on Trump Day when we had the big 9% rally on the S&P. Was it 9% that one day? Is that how much it was up?
I think it was like
10%,
7, wasn't it?
7, 9, 10, whatever it was. That's the craziest rally I've ever seen in my life. So you got to sell into that, which we did. Will I reload some of the stuff? Maybe.
Also, the thing about the
right
last Wednesday rally was where we came from. I mean, the percentage that we added was astonishing, but we were down. We were down. I can't remember how much that morning. We were down a couple percent. So that, you look at what the total gain was, but then you take the percentage of what we were down to what we had, and it makes it more impressive. But here's the final reading. 101's about halfway back here from this move. You did not get there in the pre-market, so if you want to SOH, sit on hands, see if it comes back to this area, comes back to 100, 101. You take a stab, banking on the low of the move is in. I'd say the longer it takes, like if the bulls step up here at 103, 103.50, they don't let it give halfway back, then you'll have to step up. But that's what I'm looking for in Nvidia, and this obviously affected the other chip stocks as well.
Well, AMD is actually down more than Nvidia, which is interesting. See the news directly against Nvidia, but AMD is actually down 7.2%, so even more. AMD is one that I bought too. In the STN room, I bought it at 81. I flipped it out later that day at 97 or something crazy, 96. I almost got that entire range. I might have even been 97. I made 22% one day. Back down here, 88. Do I reload an AMD? I could get talked into it. So I would say maybe on all of these. I haven't fully made out my plan here for today. But I do think that this dip could get bought. So the Nvidia dip, the AMD dip. I don't want to be too early because they've still leaked here overnight. AMD's kind of leaked here overnight. Trade down near the lows. But I'm thinking about it.
Okay. All right.
Give me the 50% retracement on AMD.
Yeah, I was just trying to do that, and it's kind of this did not really move as much. The high
90, had a huge move from 79 to 97. Big move.
Yeah, you're right. It was actually the low was 76.48. Let's just call it a 21-point move, so 10.5 off that low. You're right there. AMD.
Take a shot on AMD.
Yeah, 86.5, 87, but the buyers stepped up just ahead of that. So, and ASML, that had earnings, and you were long that going into that news?
Yeah, I was. So I had bought ASML just because I thought it might get bid up, ahead of the report. And then the Nvidia news hit, and I just hit bids. Like you taught me about a while back in the day. When the market's going down, they don't lift offers. So when you are like you needing to get out and the market's tanking on you, yeah, hit that bid. And you know what? It was slow to react. Like I was able to get out like 682 something, like literally down $1. It's down 27 now, but it reported earnings. So, obviously that changed a lot. It was down about $9 last night with the overall market. But as soon as you see Nvidia getting smacked, all the chips and stuff, it's time to get out. ASML reported 35 cents. Let's just see if I can go grab the actual numbers here.
Yeah, and also 5.5 billion. I mean, it's a lot of money, but to Nvidia, it's not a ton. No. It's not 10. It's not 10 billion.
They beat by 35 cents US equivalent. $6 euro versus 5.79 euro. Revenue was slightly light. Bookings, okay. It looks okay. The quarter is okay, but they did warn on the tariff outlook. So they did talk about tariffs, and they did give a little bit of a warning. Evercore has come out defending this morning and said they would be buyers of weakness on this. Citigroup as well, reiterating their buy rating on ASML. We're coming back in. You start thinking about 50% retracements of these moves. 578 to 683. The 50% retracement would be down like 625. It's a lot lower than here. I'm probably not putting this one on the radar here for now, but I've got to buy the dip shoes on kind of. I haven't done any buying here yet, but they're on. They're on. They're not Nikes either. They're on-ons.
I knew. Oh, I was just thinking of making that stupid joke there.
Yeah. But that's not buying with my Nike buy the dip shoes. It's my on buy the dip shoes.
Oh, did you see Nike? That cannot look at that, man. That
Hate
cannot.
Hate it.
Oh. Oh,
it was hated before tariffs. It's hated after tariffs. Just why be a hero? That's what we were saying yesterday on this. Nike, like, oh, look, it's right down near the lows. I'm like, I don't want to be a hero on Nike. It's been a dog for a long time. Competition's coming. Your boots on the ground. The Pistons game said there was a lot of shoes besides Nike. And you said those on shoes are really comfy on your feet. You got a pair of those. So it's not boots on the ground. It's on holdings on the ground.
All right, that's only half of the story of the markets last night, right? Because we were looking in the abyss, right? Oh, another day, we're going limit down. And China. We get China news. China is open to trade talks with Trump. And you come all the way back. I don't think you went green, right? Because the close, I think.
Kiss.
Ah, boy, look at that.
Fill the gap. You love filling gaps. Look at all this technical stuff Joel's taught me, about, obviously when the market's going down, they don't lift offers, filling gaps, levels. Skyman, he knows his technicals. That filled the gap almost perfectly overnight. So if you're trading and the market's down 70 handles from the close and all of a sudden rallies 70 on, we may talk if you guys play nice. Might just be a little bit of an overshoot. It wasn't up there for more than a few seconds, giving you that chance, and right back. Not all the way back down, but giving half of it back. So now we're back at the spot we were when Nvidia actually gave the $5.5 billion charge warning and, the whole thing about having to have that, whatever the hell it was. So the Nvidia news.
Okay. All right. That was not the only earning. We had some earnings. Let's get to our earning stocks. Let's go to UAL here. And we were looking at this and after hours and the expected move. It went right to the expected move. They really sugarcoated the earnings. They had a good quarter, right? 91 versus 76. And they also well, actually, it was a slight miss on sales, but they gave you double guidance. Recession or no recession? And Dennis, you were itching to buy this one after the close, and it got an immediate pop.
I was itching to buy it before the close. I was like, I kind of want to go long UAL into the close. I was like, should I, shouldn't I, should I, shouldn't I? And then I was feeling so crappy, like physically feeling crappy because I got this cold, and I was like, I'm just not in the right space to get run over if I'm wrong. But I was like, I really want to buy UAL because I feel like the quarter is going to be fine. I feel like the bar is low. Quarter was fine. Bar was low. Stock rallied obviously 4 points. So disappointed in myself that I didn't take the UAL long, but you can't get all of them, I guess. Anyways, it's up 4. The expected move is around there. Kind of just in consolidation station here most of the night here now. Delta, obviously, a lot of the airlines rallied on this as well. Cruise lines trading up here as well with UAL. So if you're looking at sympathy, cruise lines, airlines, all trading a little bit higher. They did give some guidance. They kind of gave a range. They had like a tariff number and a non-tariff number, which are kind of cool. They had like this range that if they, tariffs are coming, they thought about they said under recessionary scenario, which is kind of like probably tariffs. They said $7 to $9. They said if they get under a stable environment, they're looking $11.50 to $13.50. I've never seen that before. I've never seen a company come up with 2 scenarios. So in the bad case scenario, they're looking $7 to $9 of earnings. In the good case scenario, they're looking $11.50 to $13.50. So obviously a lot to do with, this tariff war is what they were talking about in call. So impossible to predict is what they called it with their guidance, but they gave 2 scenarios. But even under the worst case scenario, I mean, $7 to $9 on a $70 stock, still pretty good. I think that's where the market was looking.
Okay. Looks like someone has an opinion here at 72. That held up in quite a few brackets. It held up last night. It's also, I believe, the expected move is right there. The high from last week is 72.47. So right now, that's a zone area to keep an eye on. 72. I want to get if you do take out that seller there, that sneaky seller. Just realized that last week's high was 72.47.
What makes a seller sneaky?
He's not showing. He's not showing. He's showing 100 shares, Dennis. You should know that.
Little iceberg, little sneaky seller. Oh, I don't want to spook the market. Just sell a little bit. Sneaky seller.
Yep.
So sneaky, those sellers.
Or if you want to be, you know how you can be sneakier?
What?
You let it go 72 bid.
And then you hit them.
Yep.
And then you hit them.
Yep.
But the bids come up. There's again, you know, at the STN room, we have a lot of good information over there. We have the 3-hour course on execution tactics. And one thing I've always said is, don't show your hand. You know, you're sitting out there, you're like, I want to sell this. We're gonna just throw it out on the offer and hope to get done. And then the high frequency traders see your offer, then they take it lower on you. Don't give the information of your own hand out. You know, like if I'm trying to get out, I usually, you know, to cross the whole spread. We've talked about this before. Christian Fromhertz talked about this. I've talked about this. You know, you want to get out, you can usually get out mid, you know, like use those midpoint fills. Those are good. If you can't get a mid, sometimes you go 2/3 of the spread, you'll get out. But, you know, if you're small enough, again, if you're trading 10,000 shares of a stock that trades 10,000 shares a day, you're going to have to be like Joe Saluzzi and really work it, you know, like that's why, you know, you got Themis Trading over there. Shout out to Joe over there, one of the best brokers out there. But you got to work those orders a little bit. If you just throw out, like, I want to sell 10,000, throw 10,000 shares out there. Oh my gosh, we got a big seller out here. Hey, send it down, don't you? Like a big one, fresh one over here. Yeah. And then they slam it on you. Don't just show your hand. Your hand is your hand. You play cards open-handed. Hey guys, playing poker here. Here's my cards. Oh yeah, I got Cowboys. You got my guys coming all in? You guys coming all in? No. Don't show your hand.
Or you could go you could go 72-10 offer, and then have it like your program that anything that's bid at 72 you hit. You know, you show.
Yeah, you know they have that. Definitely, that's your algos. The institutions typically don't show. They've learned over the years. They used to just throw it out there. Oh, 50,000. I'll throw it out there. You'll get done eventually. Maybe not. Yep.
All right, let's keep the earnings parade going. Let's go from good price action to horrible price action here, and that's even with the guy being on CNBC afterwards. Interactive Brokers miss $1.88 versus $1.92. Slight beat on sales. They raised the dividend. They declare a 4-for-1 forward stock split. Man, adjusted EP, I guess they adjusted. It was the adjustment there. Man, no love for Interactive Brokers. Dennis, down 11.43.
And it's a stock that I've wanted in my long-term portfolio for a long time, and I never put it in there. And the main reason is that, hell, I trade there. I'm giving them revenue all the time. They got all those commissions from me. Got down there to $131, eh? Where were we then? 161. You're kind of in the middle of nowhere, though. Like, maybe think about 50% retracement. It's a dip I think could get bought. It's a great company. The question is how many accounts, really got hurt. I don't know if that many accounts got hurt in the recent sell-off. If we start selling off hard again, maybe. But, there's been on that argument. I was looking at Robinhood. What's the PE on Interactive Brokers? Let's go check it out. We could just, extrapolate $1.72 through 4 quarters, but I don't think it works that well. We're looking at 24 times. It's not cheap, but it's not crazy expensive either. I get talked in that 20 times. Man, down 130, 140, I think you're a buyer. I don't know if I wanted 62, kind of like, maybe a pass. I think it could get bought, but maybe a pass.
Almost got there. I got 154.29 is halfway back of this move. So just be aware this is way off the low. I got to 155.55. So you've had a $7 rally off. Wow, they had this thing down $18. That was probably when they were just when the spoos fell out of bed. Wow. And now it's come back. Bids. So
yeah.
I think it's once you trade to a level, it definitely loses its significance. So your next daily low that you're going to encounter is 160.10. And then there's a a 15-point drop off to the next daily low, to 144.90. So definitely a curveball here, with Interactive Brokers. Did it hit the other brokers as well?
Yeah, it did. Webull. Well, Webull's bounced back. Webull was way down. Whoa! Look at Webull on the comeback trail. BULL was way down earlier. That's fallen from grace, and we know obviously, we got up near 80. It's had a 2-for-1 stock split in one day. 2 for one day. Gets cut in half from the highs. That's just got crazy. But we were down like 36 earlier, 37, I think. Back up at 40. So Webull coming back here a little bit. I mean, at a certain point in time, maybe Webull isn't that overvalued. We were doing that analysis yesterday. Robinhood is down, HOOD on this as well, down 3.58%. Pulling back a bit. Robinhood's had a good run too. I'd love Robinhood in the mid-30s again. Should have struck obviously when it got down to $29. What? Man, there was some good deals out there. But yeah, I don't know. Am I buying Webull Robinhood here? Probably not. This is tough. We're kind of still in the middle of nowhere. So we get a nice dip here today, but you're still, to your point, Joel, in the S&Ps. Maybe you should go back there for a second, because we could talk about buying dips on all these stocks. Let's give a perspective here, though. We're still up. Like, how far? 600 points here from the lows?
Yeah. Yep.
I mean, there's so much uncertainty still here. We don't know what's China's. There's possibilities of good deals, bad deals, but I like the stocks a lot better when we're trading like a 500 SPY, not a 540 SPY. So I think I'm still sitting on my hands on a lot of my long-term stuff. I sold a bunch of stuff on Trump Day, like 7 or 8 stocks out of my long-term portfolio, because, man, when you make 20% a day, that's your long-term gains. Like you said, Dennis, you're getting a year's worth of gains in one day. I'm like, okay, let's get out of there. Get back down near those lows, maybe you get interested.
Yeah. I mean, if you think about it, you're 200 points away from a 50% retracement in
yeah, like I'd love a 50% retracement on some of these things. I don't know if you get it there either. So I think as a trader, I might be interested in buying the dip today. I think as an investor, I'm still waiting for like maybe AMD, because it's 50% retraced it. Maybe that's the one. Micron too. I did already dip my toe in Micron, so Micron. But again, relative strength's poor here too, and chips, so it's hard to buy the weakest ones. We saw what happened to Marvell. I dipped my toe in Marvell and got my foot ripped off. So it's down to $51 here, right, sitting on the lows. I mean, there's some weakness in the chips. Like the relative strength in some of these other chips is pretty bad, actually. I mean, Intel, how far is that from the lows? Not far.
Oh, Intel.
Intel's a dog of all dogs, but Marvell's near the lows. Micron's not that far from the lows. Not been great. Some of these stocks have not been as well.
Do we care about retail sales?
No.
We
don't think so. Should I go wide? I don't think it's going to. I might get some oscillation there, but I don't think there's going to be any real sustained movement from here. So I'm going to say no. That's coming out 8:30?
Yep.
Just retail sales? That's it?
That's what I got. Yep.
Okay. Nothing else, Brentster? Just retail sales? I will stay out there and risk getting picked off on retail sales. But Brentster, thank you for the heads up.
Yeah. Let's see here. I'm looking. They give a bunch of different figures here. Previous was 1%. Consensus is 0.6%. Forecast is 0.3%. Then they exclude the autos, but man, excluding gas and autos. And then the year over year, previous was 3.1. They're looking for 2.6. I mean, you're going to get some pull forward on the autos, right? Because people are like, tariffs.
Well, that's true too. How much pull forward's happening here right now? Now there was that in those numbers. People getting ahead of the tariffs. That's one thing to consider too. There's going to be some pull forward, in some of these, where some of these companies are going to have like record sales because everybody's buying ahead, and then they're going to go fall off a cliff. Okay, let's see. Retail sales out. I stayed out there. I said it's going to be a nothing burger. Nothing burger so far. Nothing burger so far. Nothing burger so far. March retail sales coming in. Brentster, you have the number. If you pop it in the background, if you have it, pop in. Let us know. March retail sales 1.4 versus 1.4 are matching. In line. We have no movement in the S&P futures. It is a serious nothing burger so far.
Yeah.
In line, algos say, next. We're waiting for the White House press release, or we're waiting for the White House, or we're waiting for the Trump tweet. That's more important to us than March retail sales.
Right. And also there's a little knee-jerk reaction down. Just tad. Just a
2
tad.
points.
Let's see
2 points is normal movement in this market.
That's like, I mean, it's not moving 5, 10, 15 of the clip. Actually going into that print, we were at 87 and a quarter. Little pop up, but nothing great. I think the tone for the day has been set here. I'm not feeling like anything's going to take us back green again. In fact,
oh yeah, there's going to be stuff. There's going to be like, oh, we get talks with Japan. Oh, we got a deal with somebody. There's a deal coming. I'm telling you, folks, there's going to be a deal coming. Everybody's going to be really excited. So that's why I'm hard to get bearish here too. I feel like Trump's going to announce. They're going to announce a deal with some country. It's like 130 countries out there. What's the odds that they announce a deal? Pretty high. There's a lot of, that's like a lot of like potential deals out there. I think the first couple of deals the market will get really excited about, and then they'll just not care. But the first couple, the market could really pop on that, especially if it's a bigger country. Like imagine deal with Japan. Could be big. There isn't a deal with China coming anytime soon, but I think there's some deals coming. Okay. Deal with the Penguins, Martin says. Deal with the Penguins. We've got a deal with the Penguins. We've lifted the tariffs against what islands was that? Who knows?
Oh, I can't even.
Penguin Islands. Don't remember now. Too long ago. Goldfish memory. Penguin Islands. Deal. Deal or no deal? Deals are coming. Okay. So bottom line, retail sales, non-event. Bottom line, herd in McDonald. Thank you, Greg. The herd in McDonald Islands. Deal with the Penguins could be coming. That could pop the market. There's deals coming, folks. All jokes aside. I think there's going to be some deals. I think it could give you a little lift. So I'd be cautious shorting in the hole here today. And again, we're in the buy the dip, sell the rip market. We still are there. Even yesterday, we were chopping around, a little bit. So, I mean, there's been opportunities, lots of opportunities, buy the dip, sell the rip. So another buy the dip opportunity. I think I'm in more buy the dip camp here today.
Okay, you know what? Since we're talking about retail sales and we're talking about the consumer, let's talk to our guest. Coming to the stage is Scott Devitt, a seasoned equity research analyst specializing in the broader internet space with an emphasis in e-commerce in the online travel sectors. How you doing today?
Hey, good morning, Joel. How are you?
Good. So quite the market environment here to be talking about the consumer, but we've talked to different analysts and their take on the tariffs and putting it into their formulas. Just observing the market reaction over the last couple of weeks here. Have you had to adjust your game plan at all?
Oh yeah. I mean, if you think of it just generically, numbers are coming down. If you think of the specifics of it, there's a lot of uncertainty around the consumer that's driving that the numbers to come down. You saw the way that United guided yesterday, if recession, if no recession. The sector that I cover does have some tariff implications as well, because Google and Amazon have cloud businesses. Amazon has merchants that access supply from China. So we're getting hit from kind of all sides, and it feels like once every 3 to 5 years you just kind of get hit with everything, where the news flow is only bad for a period of time. And the question that I kind of sit with now is, how long is this going to last? I mean, we're still very constructive on the group long term, but it's a minefield right now. You buy a stock, the next day you get negative news on it. So I'm very cautious going into earnings season for that reason.
Scott, let's just talk and obviously cover a couple of the big guns, Amazon and Google and Meta there, and talk about, you're cautious going into earnings season. Like, I've been arguing that it's kind of tough to come in here and, like, even if you're doing well, to raise guidance in a market environment that is this uncertain. Is a lot of this like lower expectations may be priced into the stocks though? Just, talk, in context of like, as we enter earnings season, and we're going to start hearing from Amazon, Netflix actually tomorrow night. Talk about, if a lot of lower expectations are maybe priced in.
We'll see when we get there. I look at examples as they emerge, right? And so using that United example from yesterday, right, the reason why I think the stock responded positively is because the base case is the positive case in terms of those are the current conditions. But if we are in a recession, these are the estimates. I don't know that it's going to be so clear for every company that they position the situation as that conditions are still good, but if they get bad, this. You could get instances. So you could have something, the strategy that United take and give two scenarios. Although I've literally never seen that until they did it. You could more likely see a lot of companies that don't give any information. And so I want to think, buy the dip is, or the buy the bad news is the right answer, given that we're optimistic long term. But because the news flow has just flipped and numbers have just started to come down, and very likely may come down further, it just seems very early. And what I've been saying to our clients is that if rather than get in front of something, owning something that's up 5 to 7% with information seems like a more sound strategy than buying something with no information just because you like the retracement that it's had. And that's kind of where I am, going in earnings season, and why I'm sitting on my hands versus giving ideas going into earnings season, because I think it's it's a coin flip with basically every company that I cover and what they could say.
Well, think about the travel stocks here too. Obviously, you're watching UAL and they're uncertain. They give you two scenarios, but you cover Booking, Expedia, TripAdvisor. I mean, all of these are kind of question marks here too, because if we are getting into a slower time, I mean, people don't go on those expensive trips if they're, hurting for money. So thoughts, on obviously Booking and Expedia and Trip, all fall into the same grouping here. What are your thoughts on the consumer traveling habits here?
It's slowing. You've already seen signs of that from airlines, issuing warnings, even United cutting some capacity yesterday. The hotels are going to start talking about it. The Booking, Airbnb, and Expedia are all somewhat unique from each other, because Expedia has the most U.S. exposure. It's about 60% U.S., 40% international. Booking is only 25% U.S. and 75% international. And then Airbnb is somewhat in between, but investors view that as more of a whimsical kind of travel purchase. And so you look at the stock reactions, and the reactions have been more attacking whimsical trips and domestic. What would be more problematic for the group as a whole is if you see changes in international travel patterns, as well, and that would be, I think, lead to another leg down in the group. Otherwise, I think again, the path of least resistance for these names is down, because the news is likely going to be incrementally, worse than where initial analyst stabs have gone. But consumers are still traveling right now, and I think the uncertainty is really what happens April, May, June, July, August, and how quickly do we get resolution on the economic backdrop or not? And the longer this takes, the more disruptive that it is. I think the weaker that you're going to see companies like those three perform in coming months.
You're also not only looking at U.S. companies, but you're looking at a Canadian company, Shopify. Also, I'm looking at C Limited here. A lot of the thought process in the markets has been, hey, time to diversify away from from the U.S. equities, the falling dollar working against you. Also, you have Mercado Libre on there. Why don't you talk about some of these overseas stocks?
So Mercado Libre and C Limited have been mostly insulated. Shopify has been hit hard because many of the merchants that use Shopify software do access inventory from China. So like Amazon and other retailers. it's an unknown in terms of how exposed that they are from a cost standpoint and how affected that they would be from demand should prices go up. So that's its own kind of animal. But Mercado Libre and C, because the economies in Latin America and Southeast Asia are doing well, and those companies are very well managed and growing quickly, have done quite well. And so if it proves that this is a relatively isolated geographic incidence of the U.S. dips into mild recession, rest of world holds up, those two stocks will continue to outperform. And they're pretty clean places to be at the moment, unless there's a contagion, that would emerge in later on this year on a more global basis.
I mean, so immediately, with these stocks that you cover, I mean, you have to go in and figure out, what their exposure is to China. And I mean, we were talking about. I know it's not in your area coverage, but Apple, had a ridiculous rip off that, and I don't know. Still seems like a lot of uncertainty, even with the news that you got overnight. It almost feels as if the market's not believing the news now. That they're believing the bad news, but they're not believing the good news. What stock been caught in the crosshairs? Meta Platforms. This trial is going on, way off the that high from last week. Probably have already given back. You talk about just buying something based on the retracement here. What ails Meta, and what can they do to turn things around here as of late?
So the trial, I think, is more noise. I mean, it makes for good TV and things like that, and comedy at times, but I don't really think there are real implications there, in my personal opinion. But companies like Temu advertise on Meta and Google, and they've pulled back meaningfully. So that's a direct effect of possible tariff implications, in terms of goods coming in from China. And then the issue with a Meta, should there be one, is just around that generally if commerce slows, advertising is going to slow. And it's unclear. We do surveys of consumers and advertisers every 3 months, and the ones that we just completed here right around Liberation Day, we're already showing deterioration in consumer confidence and advertiser confidence. So that's notable, because the previous 3 surveys were up and away. And so I think we're just looking for some, so as it relates to Meta, Meta with a 2-3 year time horizon, buying it here is fine. Is it fine with a 2-3 month time horizon? Give me some good news first, before, because I'll flip in a second when we get some positive data points and become more near-term constructive. But we're just in this vacuum right now where all you have is the uncertainty, and you don't have any affirmation or positive, outcomes. Look at what happened overnight. Forget Nvidia, but look at ASML, right? So you could be buying the dip in semiconductors just because you think this is going to be resolved. And then you realize they have to deal with companies that are going to be cutting numbers 5-10% for the next 3 months as this, or if this does get resolved. And with consumer, it's less direct, but it's definitely a second derivative. And as much as we want to think that companies like Meta and Amazon and Alphabet are like secular growth, they're affected by GDP. So if GDP does slow, those businesses will slow as well. So with Meta, like with the rest of the coverage, I say wait and see, and do sit on your hands into earnings, see what you're dealing with, and then make your decisions as companies report.
Okay, just sticking with the consumer here. Uber, Lyft, kind of quiet there. Let's just throw DoorDash in there too. I guess you're gonna show caution on those stocks as well until we get more clarity on the tariffs.
So you guys were talking about the algorithms when I was sitting in the waiting room, and so because that's all that really matters. Fundamental analysis doesn't matter in the market these days. That's like 20 years. I'm old enough to know back to when that did matter. But so Uber, Lyft, Dash, Instacart. they've all been kind of bucketed as tariff safe havens, and it's a bunch of nonsense, but like that's the way they're basketed, if that's a word at the moment. And so they've actually done, relatively well. I think that inevitably, if this leads to consumer slowdown, then they're going to be affected as well. I mean, Uber and Lyft have the unique dynamic of the emergence of autonomous vehicles and how that affects their business. That's not going anywhere. That's going to continue to be a narrative, and probably more so as we get into the June month, when Tesla shows off, the geofence version of their autonomous cybercab in Austin. And so I think right now they're easy to beat because the computers have decided that they're safe from tariffs. But I don't think, as you mentioned, I think if the answer is consumer slows down, then there's going to be less consumers riding because there's less consumers traveling. There's going to be fewer that are deciding to actually get food delivered versus hopping in the car and picking it up, and et cetera. So they're all going to be affected as well. But that's the storyline in terms of, if you look at that group of companies, why they've held up better the past 2 to 4 weeks.
Scott, last one. I just wanted to ask you about Shopify. It's come off substantially as well, down from $130 down to $81 here in the pre-market. Obviously, this was a company that was doing very well last year, very well early in the year, and now we've gotten to this tariff tantrum. It seems like all companies are coming down. Is there an opportunity on some of these names that maybe they've come down? That like again, maybe just a lot of the bad news is already priced in, and if we get any type of good news, these could pop back. What are your thoughts here on Shopify?
Shopify is always expensive by multiple measurements, and so you look at it going from 120 to 80, and you're like, well, it's still not statistically cheap, but this company has this open-ended growth path for for e-commerce and for payments, where this business could grow 20% for the next decade, on a compound basis. So I think 80, I want to say Shopify, last time it kind of imploded for different reasons because growth slowed. It got down in the 50s, so that's an easy way to think of like, where could this go before longer term investors are adding to positions, even in the face of bad news. That's another 25% from here. But I'd be comfortable buying Shopify here. But it's not a trading call. If you're an investor and your time horizon exceeds this calendar year, which that at times can be a select few group of investors, not the majority, and it's 2 to 3 years, buying Shopify at 80, is likely to be a very good decision. Buying it at 80 into a print where you don't know what's happening with its merchants' access to inventory and the cost of that, is it's certainly not risk-free.
Scott Devitt, covering the consumer, online, offline. Scott, great information. I really like your caution, the way you're incorporating all the news and events, what's now, and got to look at a lot of really good stocks. We really appreciate you coming on. Pre-market prep. We'll be dialing you up again soon.
Thanks, Joel. Thanks, Dennis. See you later.
Thanks, Scott.
Okay. Dennis, did you put something on the sell button there, and then it's just kind of?
No, I forgot. I was just resting my arm, and like all of a sudden it's like, holy cow! Lift your arm. Stock's going straight down. No, seriously though, it's been a little slow leak. We're steadily leaking here. I think this is a really tough day because I always have to buy the dip shoes on. But you've got some nervous Nellies out here with this Nvidia news, and obviously Nvidia is the darling of the market still, and it bounced back, and now they're talking about $5.5 billion worth of charges, and obviously with the tariff war that's happening here, there's just uncertainty. So I still think AI is a real thing. I think Nvidia is going to be in the pole position for a very long time. I still want to own Nvidia as a reasonable valuation. I think when it's down in the low 90s, it's very reasonable. Pop back a lot, 112, 104, 100 maybe, but we continue to leak. So, this market isn't showing me anything like, I think the market again needs another headline. It needs like something like Oh yeah, Trump comes out and says, yeah, we'll talk China. We can play nice, or I don't think he's going to say that, but you guys play nice, we play nice. It's like a big schoolyard where like the market's punishing the bullies on the yard, and obviously in that case bringing down the stocks where they just start talking about trading nice and or playing nice, and then the market rallies on it. So all we want is for everybody to play nice in the schoolyard, and this market could really start to take off. I do think there's some deals to be had though, and that makes me not really that bearish right
now. Let's just say Susan Wales hopped in here, and she's asking about HPE. I got the news yesterday. Elliott putting a $1.5 billion stake in HP Enterprise. Man, you got the pop. And I was looking at some daily highs, and now, I mean, I think the bloom is off the flower, maybe. It got the big move yesterday, kind of falling back with the market. I'd like to see if it could go green today at 1501. That was a high close in the move, trading under pressure here. So a lot of these times you get the pop, the 1 day pop off it, and then it kind of settles in. So a good day yesterday, good support. If it gets down to the lower 14 handle, you got a pair of lows at 1420 and 1427. But it looks like they use that opportunity of Elliott taking its stake to sell into it. Dennis, any thoughts on HPE?
No, you had the pop, and obviously activism works really well in normalized markets. In this market, you get a little pop and then nobody cares again. So Elliott probably very disappointed that it didn't hold really much of yesterday's gains at all. I mean, when Elliott gets in there, it kind of gives you a floor sometimes too. Doesn't make me interested. Not that much, to be honest with you. I mean, okay. I think we're just in such a market where even activism isn't having these huge effect on stocks right now. So we've talked about upgrades, downgrades not being very influential because we're being driven so much by the White House and what's coming out of the Trump administration. But I think it applies to activism too. I'm just not that excited about it. I'm just like more excited about what's the next headline coming. What's the next headline coming on the tariff war? Like for instance, even upgrades and downgrades today. Like we got Cloudflare catches an upgrade from Mizuho to buy NET. That would normally pop the stock 3-4%. It's up 1%. Again, tough tape. The market's down, so you could say, oh, it's holding up pretty well, considering where the market is, but just shows we're not in Kansas anymore, where upgrades and downgrades aren't as meaningful as they were 3 months ago. Also, if we're just talking about upgrades, another one I had of note is Lockheed Martin, which is getting a decent move. Upgraded at Morgan Stanley. More of a defensive name, though. Not pun kind of intended, but, defensive even in the market stance, not just defense stock. So I think this is the kind of stock that actually does lift, on an upgrade, which we're seeing here this morning because, it's on a defensive type of day. We're seeing staples get bid. On a day like this, a stock like Lockheed Martin can sometimes be up, even though the S&P futures are down 50.
Boy, if this thing can clear 480, I don't know if it's the day to do it today. You had a couple highs just below 479, and then one just right here, just at like 480. So 481.50. So I'm just gonna ballpark this and say if you get a solid 480 bid in this one, you got some room to the upside. For LMT. Good support, pair of lows if you want to try and buy the dip, which you may not get that opportunity. You got a pair of lows right at the 468 area. Goldman Sachs downgrades target, Dennis.
Yeah, a little late.
Took so long? Took so long.
A little late on this one. Obviously very wrong on it. I believe they just downgrade to neutral, getting rid of their buy rating here. So obviously it's been a rough ride for Target. We've talked about best of breed, worst of breed. Target's definitely of the big three: Costco, Walmart, Target. Two's company, three's a crowd. That's where we're at in so many different industries here. We've compared to AutoZone, O'Reilly, and Advanced Auto Parts. The third one's a crowd. Was for a long time Walgreens, CVS, and Rite Aid. Rite Aid was a crowd, and it's out now. It appears, Walgreens, kind of joined that crowd, although it's getting bought by Sycamore. It's sitting near the lows. I mean, the relative strength is non-existent here. Yeah, I mean, here's a stock. How many stocks are sitting 2 points from their lows with the big rally that we had. It doesn't rally. You could talk about a 5% dividend. You could talk about valuation all you want. Yeah, it's been attractive for a long time. But if Walmart, Costco are pushing them out, Target's just in a place that you don't want to be. So I can't, get on board with Nike. I can't get on board with Target. I can't get on board with these worst of breed companies. I'm going to tell you, in every single market, this applies. Buying worst of breed is usually a bad idea. Intel, Nvidia, AMD, Intel, worst of breed. If you got companies that are dominated by 3, usually the third one is the odd guy out. Target appears to be that. Nike appears to be that now. Intel has been that for a very long time. Advanced Auto Parts, that for a very long time. I'm putting Target in that grouping. I don't want to own Target under any circumstances, even though it'll have some pops and stuff. I think it's still a value trap.
You did get down to 89.57 in the pre-market. Not much volume traded at that level. But you've dipped under 93 times. The actual low of the move is 87.35, and that was buffeted by an 87.88 low. But you're really going to need a down market to get it back down to that area. Coming back on the upside, you can call yesterday's low and the close right near each other, 91.96, 92.8, 92.08. That is going to be your resistance now in Target. I just want to bring up just Walmart, because Walmart came out in the thick of the battle and said, hey, we're okay. We're sticking with our guidance. That's been a really nice move in Walmart, only down 12 cents today. So I don't know. Instead, even trading above its 50-day moving average. So the strong has been strong here. I'd be keeping an eye on this one to see if you get some more profit taking. We do have some earnings after the close today. Nothing really special. Dennis, what do we have? Las Vegas Sands. I mean, is that a forgotten stock? When's the last time we talked about hanging out near the lows?
Trash, man. Holy. Another trash stock. Stock's making new lows. You got to go. It's right near it's back down to 3-year lows. Stock was $80 6 years ago. What a terrible story. Again, trying to be a hero and saying this is the turnaround story. It is so tough. Sometimes you're going to get lucky, grab a turnaround story at the bottom, make some money with them. More often than not, you're going to become a bag holder. A lot of bag holders in Las Vegas Sands. Tough to come in here and say, yep, this is it. This is the time.
Okay, and I guess we got to talk about probably the biggest report of the week coming up on Thursday after the close, and that will be our last report. Obviously, the markets are closed here for Good Friday, but man, what a champ. What a champ Netflix was yesterday. Had its report. It comes out with the information ahead of the report. I don't know. Is it kind of like we're going to give you some good news now and bad news later, Dennis? I know you had your eye on this one. I believe it was after hours on Monday. Can the strength outperformance continue in Netflix?
I think it's got a lot of things going for it. 1, tariffs are not an issue. 2, it's still cheap entertainment. People are staying home more often, not doing as many things. Like a Netflix account will sit. We won't go to the movies and just watch on Netflix. I think there's a lot of reasons to think that Netflix could be one of the great 8. I'm calling right now. I think Netflix of the great 8, talking Magnificent 7 plus Netflix, I think Netflix is the first one that hits all-time highs. I think it's going to be the first one of all of them to get back to all-time highs. So, yeah, I do think I'm a buyer of Netflix on dips. Valuation's not fantastic, but it hasn't been for a long time. When we bought it, and way back, in the day when I bought this at 175, 180, 181, I think it was, got down to 162. It was trading 15 times earnings. And I made the argument that day, that's back in 2022, that I was like, it's like so cheap now. I'm like, it's never been this cheap before. 15 times for Netflix. It was crazy. Is there an opportunity here? Like, it's not cheap, but no. I do think they're positioned well. So I don't own it. I don't know if I intend to own it, but if I make it a call, I think this is the best one positioned for a prolonged tariff war.
Ahead of earnings, going into earnings, I'm just looking at this $1,000 level, and of course, you did get above that, go to 1,050. I like to see it maintain its bid. The only thing I'd get a little bit cautious on the stock is if it didn't if it just hung out here and didn't punch through 1,000. Then I would perhaps look for a little bit of a pullback. And so far, it's fighting off the market forces, right? The stock is a stock is a stock when the VIX is like at
Sure.
100. But right now, Netflix, that's not the case. All right, it's 9:01.
We
We're gonna
didn't get
wrap
the earnings
things.
previews in. Obviously, Netflix is the main one for the earnings preview. American Express, I just want to tell you which stocks to report. So tonight,
Okay.
CSX, Alcoa, those are the two main ones on the radar. Then tomorrow, we've got Netflix is the big one. Taiwan Semiconductor is there too, though, and that is going to be the bigger market mover than Netflix. So because obviously we want to know what's going on with the chips. UNH, American Express, Schwab. Then we have Easter on Friday. So Easter
Good
holiday on
Friday. Good
Friday.
Friday.
Good
Yeah,
Friday, yes.
would
So,
you
but
be
Easter
nervous
weekend.
with this Schwab going in? I mean, I'd be like, holy mackerel! I know a little bit different company than Interactive Brokers, but I'd be like, I don't know. I don't know if I'd be
Or
take.
did Interactive Brokers just set the bar low enough for them?
No, I don't think so. I don't know. Well, we'll talk about Chuck. We'll do that tomorrow. Um, Jim Sony has been absent for a couple weeks. Took a nice long vacation, missed all that chaos, and he's short, Dennis. He's short. What was that ridiculous open that we had? Was that on Monday? That was on Monday when
I
we
was tracking days.
opened up 100, and he took a short and he gave himself a big leash on that one. So I'm sure he's still in it. We'll talk to
Holy,
Jim tomorrow.
selling off
On
more here,
I think
folks.
yeah, selling off more. Look out below. We'll try and find some support in the STN room. Thanks for joining us on PreMarket.